Hi, what's going on, everybody? Chris Franks with TexasWest Capital. And, of course, my friends there, Andrew and Tillman from Arch.
Hey.
Yo.
Coming in. We are here with Beards and Bitcoin. So if you don't know, you're about to find out. And it's a lot of fun, right? So anyway,
you'll find out first and foremost that the only thing that you can control is how much you lose. So
see, guys, listen, if I say it enough, even these guys figure it out. Look at that. You see how that works?
I stuck that on my first landing. How many times did it get you try? How many times did you have to try to get my handle on Twitter before you got it right?
Yeah, I know. But aren't you just glad that I eventually got it?
I am. We've moved past.
People?
We're at a deeper phase of our relationship.
There you go. And soon you'll have the same number of followers as Andrew there, and you'll be fighting it out for the the KOL status and all that. And then you'll
I'm
have
not
to
as good as Andrew. Listen, the market weighs in. The market has spoken. Andrew is the KOL. He is. Look at those glasses. I couldn't pull those off. Those are those are Fashion Week glasses.
Well, you were fighting for words there. Those are hey, by the way, Tillman, I know you were really excited about Flare before we came on here, man. It's broken out. You got
it has broken out.
Yeah, look at that.
It's pumping. It's nice to see something move in this market. I will say that.
It's broken out from 2 cents to 2 cents. It's really flying.
Yeah, it's amazing how that's like 10% or more, right?
So, what are we serving tonight? Chicken or chicken?
Well, not chicken or chicken. It's chicken, of course. Chicken or chicken. Anyway, hey, listen.
Boy, when they're on the plane and it says, "What are we serving tonight? Chicken or chicken?"
Neither.
We're serving broken out from 2 cents to 2 cents.
Yep. No, in all fairness, it was down at 1.6 cents, and now it's at 2.7 cents. So
it's almost nearing a double there.
Andrew doesn't believe in percentages, and he doesn't believe in decibels either. Unless it's lower values.
It broke lower to
Andrew,
1.
Tell us what a SAT is. Andrew, tell us what a SAT is. Andrew deals in whole Bitcoins. When he goes to market, he's like, yeah, I think today I'm going to buy 14. Yeah. So he just deals in whole values. Yeah.
Whole values are nothing, right? Whole values are go home.
Yeah. All or nothing.
If I can make an extra penny on Flare, it's worth doing. It's worth doing.
Especially for Flare, because that's a big bit of money.
Hey, listen, I'm just talking about percentage mover. 16% today, so that's a good mover in the market.
You make it cheaply. And that's what a lot of people in the market are looking at, right? Where can they get it? Let's face it. Most of the people in the market aren't like Andrew. They're not like, listen, 14 whole Bitcoin or nothing. They're like, listen, 140,000 sats, maybe. Okay. So something like Flare or Aster. Somebody's here asking about Aster already. These things that are flying here lately, people get all excited about because it costs them like a penny to get in. And then they get out for 2 pennies. And hey, there you go, right?
Well, I think there's a natural tendency for all of us to want to be in the next project that 100X is, right? I don't think very many of us got to experience the ride from Bitcoin's, genesis to now. And in some regard, the bloom is off the rose. From an ego perspective, I was a first, and so you're always wanting to be first adopter, first market mover. Why? Well, that's where the glory lies. That's where all the I told you so's lie, and that's the hardest path, though, and that's when you're betting against the mob. And that's a lonely place to be, and most people don't have the stomach for it. Especially in crypto, it typically tends to last a long period of time. You can sit on some of these projects for. Well, look at the XRP guys. You talk about patience, man. I was a believer in XRP a long time ago. I was what they call not diamond-handed. I was like, yeah, don't need this. But some of these guys have held for 7 years plus, 10 years plus, and are at a place now where they're finally getting to say that I told you so. But even 7 years compare that to other markets. Like what, you know what I mean? Like that's, I think, what the attraction of the crypto space gives people at its core, which is like in a 10-year period of time, I can become rich.
Yeah.
And yes, it's going to take a lot of guts, and yes, it's going to take a lot of research, and yes, I'm going to puke along the way a lot, but I'm if I just hold, I'm gonna get there. And I think Bitcoin, hodlers and the OGs of Bitcoin have paved that road pretty clearly for us. Like,
Yeah, I mean, even for me, it's crazy to think about. Again, I'm one of those guys that heard about Bitcoin back in 2010 or so, and was like, man, that would be pretty cool. I think I'm going to do it. And I even downloaded the stuff to my computer to do it, right, to mine it. And then I just got busy. Life got in the way, right? And then here I am revisiting it one day while I'm in law school in 2017, January of 2017. I'm like, well, now.
yeah.
And so I get into it then at, $1,000, $1,100. But even since then, right, that was 2017. We're basically 8 years later here. And, we're talking about going from $1,000 to $120,000, which really isn't bad. But, the sad thing is most people who are coming into the market, unfortunately, they come in with that mindset. Oh, yeah, sure, I can hold it. I can hold it 5 years, 10 years. And what happens after, 3 months or a year, they're out there selling it. And then it goes where they thought it might go. And then they're kicking themselves for not holding it anyway, right? I mean, isn't that basically where people kind of get to?
I find that most of them capitulate somewhere down that waterfall, right? Because I've been there. In my own human psyche, I think that's what the lesson of the market is like it's a mirror of human emotion. And when you see the capitulation events and you see the volume step in and you see the panic, it's like watching people run out of a store because the store's on fire. You can feel it, and you don't know these people, but you can literally, as a mass of people, it's a race, right? And that's something that most people will fall prey to. Like they'll go, oh crud, and at some point down, even at the bottom, there's a whole lot of psychological turmoil that you put yourself through. Like, I should have been. You start counting the money that you used to see in your account that you don't see in the account now. You start playing out what that money would have bought you. All those things start preying on you. And as that price starts to stay depressed at the bottom rounding portion, most of the people don't even realize that, like, that's the time where you should be accumulating.
Yeah.
And that's where everybody's puking, and that's where people are giving up on the project, going, what a waste, I was an idiot, I'm just chalking it up to a loss.
And it's not even just in crypto, right, Andrew? Because Andrew, you've been in the market for quite a long time as well, as witnessed by your gray beard. And I'm sure prior to crypto, you were also at times doing that same thing, right? Where you get into something, you'd have like great hopes for it, and it would kind of sit there for a while, right, at the low, and then you'd see other things taking off, and so you get out of your position in that, follow them as they kind of get toward the top, right? And then you'd be like, oh, it'd come back against you, and you're losing some money there. And meanwhile, the thing you were originally in starts taking off. I mean, we've all done that, right? Multiple times in other markets, not just in crypto, right?
Yeah, conviction is a wonderful thing, right? You've got to have conviction to make, decisions that end up being right over time. Yeah. Otherwise, it's just luck. You can throw $1,000 at 4 different meme coins 18 months ago, and there's a chance it goes to zero within 19 minutes, or there's a chance it goes to $75,000 in 21 minutes. Pure luck, no conviction. But when it comes to, investing, right, as Tillman mentioned on the XRP side or whatever, you got to have a lot of conviction to, be at $2.80 to $3 in 2017. And then to watch it go all the way down to 20 cents in the following, 5 to 6 years, and then watch it go back up to $2.80 to almost $2.80 to $3, where it's back now. That's real conviction, right? And can that conviction hold up to $5, $10? Maybe. Do we get there? I don't know. Why would we? I don't know any of those answers, but people that have weathered that storm, that's conviction, that's investing, that's not just dumb luck. And so there are plenty of projects in the space beyond Bitcoin where conviction will pay off longer term, because there are going to be things that survive. You know, because at some point there will be another crypto winter where everything will be tested as to what in the world is this for? Is this got any utility whatsoever? And you know, what are the numbers behind that? How many users are actually using this chain or that chain? What is the chain being used for? Is that use case, does it have long-term viability, or is it just nothing? And in the short term, they're just shoveling users on it to make it look good or sound good.
Yeah.
All that stuff will end up, you know, coming out when you get down beyond price and you get down to, you know, is this going to survive over a period of time? And you know, I made a point on a show yesterday that I hadn't looked at a certain price of a stock in a while. But even the price that I had looked at it last was extraordinary, right? So Priceline, which turned into booking.com, you know, was basically $1 back in the financial crisis. No, sorry, back during the internet bubble, right? So the bubble burst. Then you had all these internet companies go to really, really, really low dollar numbers, or they just cease to exist.
Yeah.
Well, the last time I had looked at it, it had gone from $1 to $2,000. And then I looked at it yesterday, and Priceline/Booking.com is at $5,400, right? So not only did it go from $1 to 2,000, but then in the time I had looked at it in about a year, it had more than doubled, right? So there again is quote unquote conviction, right? Like, are you thinking at any point in the 4 or 5 years, even after the internet bubble had burst, are you thinking, you know what? And Tillman made the point that you know, Priceline or Booking.com, it's effectively, you know, they've created a community that is very, very committed to their product, which is, I want to find a way. The best way to say it is a subsection of you know, customers across the globe that are just basically cheap. I don't want to pay the price at Hilton. I want to pay 17% less. So I'm going to go on booking.com and find a way to pay less.
Or Andrew, it's that I think it's also the demographic of people just aging and not being willing to give up what they are familiar with. I find myself doing this all the time. Like, I still use eBay. I don't know why, because I like the fact I have a perfect rating and I've had it for 20 plus years. You know, there's just, you know, once you get in these ruts of service providers, if they're giving you a good service and you feel like, and it kind of goes back to, you know, I think one of the things you said that we should not gloss over is true utility versus the illusion of utility. There are a lot of people that have gotten very masterful in making a project feel like there's a lot of people using it, and for good reason. The truth of the matter is that when I evaluate a project, I go use the product myself. And I say to myself, what does this evoke from a desire to go back to the trough perspective? Like, how much do I want to use this product? Do I like it a lot? Does it get me excited, get my juices flowing, crank my tractor, however you want to say it, right? Does it get me going? If it does get me going, the second question I have to ask myself is this good for me? So, you know, and so like a good example of one that I really, really liked, but it wasn't good for me was Pomp.fun. Really liked it, saw the utility in it, not necessarily a good use of your time and effort and money and energy, but I still loved the exercise of learning that. And so my whole thing is I'm looking at projects now and trying to say to myself, truly, like, are people going to be forced almost to use this because it provides such a needed service, right? And no different than what you would see is like, what if a brand name bank today, brand name, Name one of them. I don't care. Wells Fargo, Bank of America, all the big ones. What if today they said openly, come to any of our branches with cold storage and we'll loan you cash and you can keep your cold storage? How many people would use that utility? I think a lot, right? And so that's an example of something like when you see those types of offerings, when you see a new protocol pop up that's a DeFi exchange that bridges a specific amount of liquidity on one side of the world to another side of the world, like Tron, or like is it Tron, Andrew, the Justin Sun, Tron? Yeah, Justin Sun's Tron. That's a great example. It's like, I don't know why it's been successful until you dig in and you go, oh, wow, it's a liquidity bridge that nothing else serves the purpose in. And so people use it. It's true utility, right? So, these projects, to Andrew's point, I think you're going to see a lot of hype. You're going to see a lot of headlines. The question is do you really need the service or not? Is there a reason to come back to the trough? And is it good for me too?
There are additional examples of that to the downside in crypto, right? So when's the last time anybody listening to this call or on this call used OpenSea or Nifty Gateway? Nobody.
You want me to answer that?
Yeah. Yeah. I mean, I
like last week.
Okay. So before then, what was the time period that you used it?
It went dormant. You're right. It went dormant for probably a year and a half. Yeah. But it was seasonal. You're 100% right on that.
Yeah. So the question then becomes, again, utility. Utility seems to be funneling itself into financial markets. Like crypto is moving it. We're going to talk about the CFTC stuff here in a minute, but crypto is where it's finding utility is associated with the innovation and pace of innovation and change happening across the world of finance, financial markets, and all of that stuff. Additional projects, whether it's Pump.Fun, which has gone from, it's probably got 80 to, 85% less activity now than it did a year ago. Same thing with OpenSea, same thing with Nifty Gateway. Those in their heyday were doing X amount of, dollars or whatever on a daily basis. And that's been chopped to 20% of what it used to be at best.
I got a question for both of y'all then. Are those the projects that have the most alpha? Because it's almost like they're down 95%. They've been essentially deemed dead, but they still have such household brand recognition to millions of people. It's kind of like crypto.com, Andrew. I honestly, until very recently, until we started dealing with them, I thought they were dead. I thought the whole them sponsoring every stadium in the country broke them. I really did. I didn't know where they went they went dormant for years.
So to your point, if Wells Fargo were to announce today, hey, come bank with us and you can now use your crypto wallet or whatever, my contention is that would be an extraordinary announcement on crypto Twitter. The other 90% of the world could care less.
Yeah.
It would nobody there would not be a rush to Wells Fargo branches in the way that crypto people would think there would be.
Yeah, you're just saying it wouldn't create demand beyond what's already there.
Now, what would that look like in 3.5 years? That's a completely different conversation. But it would not create additional demand, additional opening of accounts.
See, I disagree. I think that it's like, any type of a sales pitch. Bitcoin has to have so many touch points with a human being before it, like Chris said at the very beginning of the show, like he got touched in 2010, but didn't do anything about it until 2017. Like there's certain, everybody has how many touch points.
I don't want to hear about Chris's personal life on this.
Yes, you do. Yes, you do.
I don't know.
Listen, you're just,
about that. Right.
Listen, it's like, when are you convinced, and how many times does Bitcoin have to, resonate with you? And my whole point is like, if you see Wells Fargo or a major bank open up Bitcoin signs in their lobbies and attractive rates to borrow against and those types of things, You don't think that the people that are on the line are going to jump over and go,
No,
okay,
I again, this is my opinion. I don't. One, those customers that are spending any meaningful time, that even go to the branch once a month, are not Bitcoin people, first and foremost. So now you're trying to attract Bitcoin people who are just absolutely wildly anti-bank in the first place. So they're like, what are you, crazy? I'm not going to go do a wallet thing at Wells Fargo. So it would take time. It would be a great announcement, no different than JP Morgan's announcement that you're going to be able to send your checking account, money to your wallet at Coinbase, right?
Well, it's a good example of these thought exercises. And, groupthink is such a dangerous thing, especially inside the crypto community. And, I think your points are valid. Maybe it wouldn't be that big of a needle mover with most people. It would be so exciting to me, which it definitely,
Right.
is a confirmation bias.
So let me ask
you. You also used OpenSea like last month. There are a whole lot of people doing that, right?
So Andrew, just so we're clear, you're saying that you don't think there would be like an immediate thing, but you think that it's possible that it could start something that after maybe 3 or 5 years down the road, maybe it kind of really adds into it.
Well, here's the truth of the matter, right? So I'm certain that there are people at these massive global banking institutions that have had a ridiculous amount of meetings about this concept, right? And then they've grabbed an enormous amount of data from their customer base and asked some of these kind of questions. And so they have data sets, and they've probably come to the initial conclusion that doing a push associated with crypto isn't worth it at this moment, or else they'd all be doing it. JP Morgan is different. They want to stay ahead. They can do some things with Coinbase. So they'll all follow slowly.
I just think that's where me and you disagree. I think that gives them way too much credit. I think they're just cowards and they wait until the herd moves and they move in the middle of the herd.
I'm basically getting there. What I'm saying is they've had these meetings and they're like, it doesn't really move the needle like a new checking account tier that might be interesting to 62-year-olds with $7,000 in their account.
But what I hear you saying is you think they're right.
No, I don't think they're right. I think they're in the short term, they're smart not to do it because it's not going to move the needle. In the long term, they'll be forced to do it.
Well, let's compare it to like a stupid analogy.
I'm just peeling back the curtain on, let's call it, traditional financial institutions, right? So if I'm having conversations with some of the guys I know at Morgan Stanley, and all they've really said about it is, yeah, there's some rumors that we might be interested in buying an exchange. And then I hear a month later that Morgan Stanley has decided to open up spot crypto trading inside of Morgan Stanley, not right now, not next quarter, but in 2026. So there's my data point is that they're talking about it. It's just like,
it's just slow.
It's, it doesn't
it's
seem.
It's not the most pressing thing on the stove.
Correct.
Yeah.
But if you're listening to this show, what you should be taking away from it is, listen, I mean, generally speaking, in terms of global push worldwide, you are actually early. And so putting in now, regardless of what you think of Bitcoin at 113,000, because let's face it, people get stuck on that number, right? It's so big for most people.
Well, there's 8 decimals
10 years from now, right?
behind the zero. Yeah. So you can get one sat if you want to. And
well,
go
here's
as
the
small
other
as
thing
you want.
too, for all of these organizations, while we think that there's this huge additional regulatory clarity around crypto, that's not actually true. I mean, they've stopped making it borderline illegal to put your hands on crypto in the United States, but there's not the market structure bill hasn't happened. That hasn't happened yet. It will happen. We've basically given a thumbs up that stable coins are going to be a good thing in the United States, but how, where, that's where the market structure bill has to come in. So you can't really do much. Like the idea of Wells Fargo saying, hey, bring your crypto wallet in here, they functionally really can't do that. There's no rules for that right now.
I don't disagree with anything that you're saying, really. I'm looking at something else, though. So my question is kind of redirected to, to me, there's a huge first market mover advantage and market share to be had. Whether the legacy banks and those firms want that spot or not, to me, is irrelevant. It's like there's a lot of liquidity that can be unlocked, which everybody's in that space is measured based upon assets under management. And one would assume that if you are the first to be the market maker as it pertains to terms for loans at Bitcoin in physical locations, that to me would be something that would be far bigger than the steak shake or whatever, taking Bitcoin as a payment. It would be monumental as it relates to getting liquidity moved into that new entity. Would you agree with that, or do you think that would not be?
No, I the opportunity as a first mover, let me introduce you to Coinbase and Robinhood. That's the answer, right?
So you think brick and mortar doesn't matter anymore? You don't think that there's any chasing brick and mortar?
Well, because you're talking about, so Robinhood, for all intents and purposes, based on just total customers, would be about the 5th largest bank in the United States, right? So they got 30 million customers. Every regional bank you can think of, PNC, Fifth Third, BB&T, which changed its name to something weird, Strident or something else and something else. They don't have 30 million customers. They just don't. And Coinbase is bigger than JP Morgan. So they're the ones that are pushing the envelope by adding banking services, right? So, unless I'm nuts, the money market rates you can get on USDC and other things at Coinbase are extraordinary.
It sounds like and I would agree. This is just the first time I've really thought about crypto being the impetus for it. But just like all other brick and mortar businesses have essentially died because of online business, this is now the banking business, the brick and mortar becoming completely obsolete to banking. And that, your point is well, kind of taken in the fact that it doesn't preclude you from putting 100 million customers under your belt. You don't need brick and mortar if you're able to do that, because that has far exceeded any other of the traditional finance firms in terms of total customer count. So I agree.
Hasn't been in the last 10 years, the banking institutions that have started and then grabbed market share or grabbed meaningful customers have basically had zero brick and mortar presence. Right? The Chimes of the world, the Cash Apps of the world, the whatevers of the world.
Well, the inevitable elephant in the room is then that means cash is dead officially. That means 10 years from now, you're not going to go to a physical location and get a physical representation of money anymore. Your physical representation will now be a digital, form on your phone or, in some other, it'll be physical in the fact that it's represented in a electronic device, but it will be 100% integrated in a digital way.
To flip it on its head, cash in the United States is effectively used for tips, for something you find as a service, and nefarious reasons. That's basically what cash is used for these days. Because anything, you go to a restaurant, you use your card. You go to buy something meaningful at a store, a good or service, you're using a debit or a credit card, yada, yada, yada. You're not using cash. You use cash to pay the valet
listen, I agree with all that, but it's very different than putting the death nail in cash. You know what I mean?
Death nail in cash is, that's an entirely different conversation. Cash has to exist for the entire rest of the system to exist anyways.
So this,
I don't know, man. They may all go digital. It sounds like it will inevitably. That's the slope that we're slipping down.
But we're slipping slowly, right? Because it's the same idea that I teach, with trading, which is that, and a lot of people that don't understand, they fight back at first. And this is the idea that everybody herds, right? And what does that mean in trading? When you talk about markets, it means money managers herd, right? It means because it's safer to do so, right? If you do what everybody else is doing and everybody's losing money, well, hey, you're just with everybody else, right? If you step out on a limb, though, and you're losing money, then everybody's right. So when we look at this here and we talk about these big banks stepping up and doing this new thing, you know, it's a lot. I think it follows that same kind of idea there, because if you're the guy at Wells Fargo that said, hey, let's jump up and do this, and it doesn't work out so well, you know, you're the dead guy. You know, Wells Fargo is the dead bank. But if you're like doing what everybody else
not
is
everybody's a Larry Fink, is what you're saying.
Yeah. If you go and try and get $25,000 cash out of your bank, they might put you in jail right there. Right? They'll be like, nope, we're taking you to the vault. You're going to stay here till the cops get here.
How dare you?
that is how it feels. Like,
well, one of the most interesting tweets, to your point, that I think has stuck in my mind for a long time was one of Cardone's tweets, not Grant, Gary, and he said something like, I took $100K in cash to my bank today, and they wouldn't let me deposit it. And he was all pissed off about that. And I thought to myself, is that true? It is. They won't let you bring that type of cash in.
It's crazy.
They don't. Yeah, they don't. Yeah, it's really nuts.
Right. So to that end, on both sides of this conversation's bell curve, right? You have, you know, what is cash and its usefulness, and then obviously to solve the problem that we just talked about with Gary, obviously the digital version of things and wallets makes a lot more sense, right? Makes a lot more sense to do that. So we are in a really unique moment associated with money. And that's my point about crypto, that the ethos of crypto and its ability to really, really shift kind of the Overton window of what do markets, how do they act and react over the next 3 to 5 years with this huge explosion of innovation. Crypto is the thing that is moving that Overton window. And, you know, to have the CFTC say that, oh, okay, you know what, stable coins work for all the stuff you want to do, you know, in the futures markets and all sorts of stuff, right? It can be used as collateral. That's a huge deal. That is a huge deal. I was
just going to ask you, what kind of impact do you think that's going to have on these traditional U.S. derivative markets now?
Again, to me, what that denotes is that they are basically setting the foundation for complete 24/7 trading, like no holds barred. If your product or service in the world of finance is not available 24/7, you're going to fall behind because almost all of it will be available 24/7. So 24/7 trading, 24/7 availability of credit, and all of those things. That's where we're headed. And the stable coin inclusion on the CFTC side is a big sort of stake in the ground, you know, having to do with that, right? So I just see it as that. I see it as, you know, that's where we're headed, and we're headed there faster than we think we are, much faster.
So do you think then that's going to open up, like, in terms of a river, you know, flowing in? Do you think that widens the bank now, adding these stable coins in here? Do you think it measurably widens the amount of inflows into U.S. markets then, or into, you know, if it does worldwide markets? Or do you think it's just another way to get in, but it doesn't necessarily expand the amount of flow coming in?
I mean, I don't know to what extent it creates additional demand. I just know that, you know, when you have, I just think there's going to be, the markets are just going to look a little bit different. You know, to what percentage will they look different with 24/7 trading? You know, we've probably got 50 years worth of liquidity structures, right? Liquidity charts, liquidity at the open, you've got enormous liquidity. At the close, you have additional enormous liquidity. Well, 5 years from now, when the open and close have effectively been wiped off for the better part of 24 to 36 months, what does that look like now, right? Where does that liquidity go? Does it go to the middle of the day? What happens with that? I don't know.
Yeah,
But those will be structural changes that will, adjust the shape and the face of how markets function. It will. And that's a bigger deal than people think, right? Liquidity at the open and liquidity at the close. There have been firms and funds and people that have made complete careers.
Well, let's take it broader than that, Andrew. It affects every strategy you deploy, every single strategy. And if you don't think it does, I can prove it to you. Like, tell me your strategy, and I'll show you why those two things meaningfully affect it. Carrying into the overnight is a huge risk that has to be weighed very carefully, especially if you're playing with leverage, right? Especially in the weekend. Yeah, exactly. So there's just things that, the more you play in the markets, the more the markets teach you those hard lessons. One thing that was really interesting that no one's talking about is that the Eastern Economic Forum this month in September, the Russian representative said that Trump, his whole speech was about Trump using stable coins to refinance the national debt of $35 trillion. That was the first time I've ever heard somebody of that prominence speak on that as if it was a legitimate strategy that was being deployed. And he points out in his speech a lot of, anecdotal evidence to point to the fact that is what's being done. If it is, we are going to see a pump that you've never dreamed of, right? But it's one of those things that it's exactly what Michael Saylor told Trump he should do. And the fact that another country is now pointing to a lot of things that we've done to kind of get ready for that, it's back to what we just talked about. It's digitizing the dollar in a way where now you have two economic sets of rails that can be played against each other in an arbitrage way from the government, which, it does provide a ton of new flexibility in terms of controlling economic, policy. I mean, having those two levers to pull, it's like, it's nothing but more power, I can assure you, and more control and tighter tolerances and all of the things that they want in market control mechanisms,
And guess what? Contrary to the doomsdayers, about the U.S. dollar is going to hyperinflate and whatever, guess what? It ain't happening. If that's going on, it ain't happening. This is something I've been talking about. What if that's what's going on? What if his excitement about crypto and stablecoins and all this is just this way in which to, refinance that debt, basically. And, maybe it is, maybe it isn't. But at the end of the day, there's a lot going on to it. If it is, the dollar isn't going anywhere. Now, I see that the dollar is going to lose prominence. I see that, maybe we'll start seeing some others kind of coming up and doing a little bit of work as well. But the dollar's still going to be the dominant.
Listen, the dollar will always be dominant as long as we are the innovative force of the world, because dollars concentrate around innovation. Like that's where it all concentrates. So if you are the innovator and you are driving innovation, you will have the concentration of dollars. The question becomes is how much can you get away with inflating those dollars along the way before people start calling foul? And I think the stable coin piece gives them an excuse, to do whatever they want, essentially. And it does also accomplish what they want to accomplish, which is to make the current debt look cheap to pay off. If you are the most liquid set of transactional rails in the world, and you have the liquidity of the U.S. economy behind it or embedded in it, you tell me that that's not going to get a lot of additional liquidity and people aren't going to use it. So I look at markets as like they're only as good as how liquid they are. And the dollar is extremely liquid. And if we build our economy on a set of rails that are more efficient than our previous set, we should be more liquid than we are now by a huge multiplier. And pressing that liquidity into the market and then using technology to extract more liquidity in terms of growth potential, I think there's nobody in the position that we're in. So I think we've got, to your point, nothing to worry about on the dollar side of things.
Yeah, yeah, and that's not a bad thing though. I mean, a lot of Bitcoiners, especially if they're new to really, macroeconomic, geopolitical thought, stuff like that, they think that the dollar has to die in order for Bitcoin to do well, but that is not the case at all. As the three of us have argued for over a year now on this show, Bitcoin becomes part of that settlement layer. It becomes part of the global system. Bitcoin wins. That's end all be all. It doesn't. You don't have to have the death of the dollar.
It depends on what you mean by winning. I don't even think it wins from a who uses it more perspective. I think fiat will always have more users than Bitcoin, period. I really believe that. It's easier. It's a central distribution force based upon might and force and weapons. That isn't going to go away. At the end of the day, people are structured in this world, and the liquidity comes from above, and that's not going to ever stop, because that comes with the responsibility of power, and people always concentrate power because leadership is a desired trait, and people don't want to lead, they want to follow. And so we're just naturally bent as human beings to use fiat, in my opinion. Bitcoin, though, it is a true measurement against that fiat. It's a truth when everything else is a lie, right? So let me give you a point. Let me give you a case in point of this. Milk has gone up by how many X in the last 5 years? Is that truly a pass-through based upon the incremental costs of the farmer, or is that a price gouge? No one knows, and there's no way for us to know. They could just be inflating it because COVID was a reason to inflate the price, and they're just getting away with it. Or there could be something materially different in their supply chain. But when you see prices go up uniformly 40% across the board in a crisis, the supply chains are all different. So shouldn't the incremental increase in price be different? But they're not. So it tells you that people are taking advantage, and there's delta to be had in that, and there always will be. And that's essentially what herding of the cats provides you, is money. And you can see that even in some of the mega churches. Is like, you wonder really what the enterprise is after, and a lot of times it's after making people feel really good, so they'll give a lot of money every Sunday, and they can build bigger buildings and make more people feel good.
Yeah, I don't know.
Tillman.holloway@archpublic.com.
I haven't.
I didn't name any names. I just said that's a theory I've heard is out there. I don't know if it's true or not.
I've yet to see the milk farmer luxury movement come to fruition. I'm not seeing them drive Lambos and build new houses. And
you see the Lambos pulling pulling the cows behind them or whatever. Moving.
Listen, let me take you to Texas, my friend. Some of those quote farmers are some of the wealthiest people in Texas. They've got
yeah.
So we've gone far afield here, milk conspiracies and all. I have to leave the stream because I have work to do at Arch Public. So I will leave you guys.
No, Lily, it's okay. You can tell us if you just want to go have your little nice lunch.
No, I'm 4 minutes late to this meeting. So I bid you adieu, gentlemen.
Well, we'll see you next week, man.
You bet. See ya. All
right, now we can talk about him, Tillman. Right as he pulled off.
I think he's under the weather today. So
yeah, he wasn't his usual.
Give him some grace. Yeah.
But anyway, hey man, how about Bitcoin, right? So we had this nice pullback, and I do this show every Tuesday now. This Trading Spaces show, Tuesday Trading Spaces show, on X, and I'm on there with a couple other guys, real good guys as well. And we were all kind of in agreement yesterday with the likelihood of what we wanted to see was this pullback below the recent swing low. What was that on just here on Monday or so? Mm-hmm. We were potentially looking for a sweep of that, and we wanted to watch that sweep and see if we can get that close back up above it to potentially mark some kind of low in there. And man, it's exactly what we got. As a matter of fact, right before it happened, I was recording the evening video update, Bitcoin for our Trading Academy folks. And I said, lad, listen, I'm looking at going right here, which it was the daily S1 pivot at about 111,208. I said, I think we'll probably get a sweep of this range right here. We'll pop on that. If we can go back up and close back in the range, I think we've got a spring on this, and we're heading back up. And man, oh man, we did. We dipped just below that target. And we're up here, what now, about, oh man, wait, what was that, 111 or so?
Yeah, we're a couple thousand above that now.
Yeah, we're up almost $3,000 off that overnight. So I like what I'm seeing on Bitcoin. What about you, man?
You know, I think I look at the price as just psychological torture. And I look at what would be the most painful price for people to see without costing them too much money to buy it down to that level. That's really what it's about, right? You look at the market depth and you look at the order book and you go, okay, if I want to buy the price of Bitcoin down to 109,000, it's going to cost me this much. The cumulative total of the order book that's available to buy, and so sell. So it's like if you're a market maker and you want to move it at Sunday night at 2 a.m. I mean, how long have we been talking about the movements happening on the weekend in the spot market now that kind of Wall Street has taken control of the demand in the operating the normal hours, right? And so I look at these things as like huge buying opportunities. Because in any massive market that is traditional, the optimal curve that they seek is a 45-degree angle. And they don't like it steeper than that, and they don't like it shallower than that. And that's, to me, what they're kind of allowing to happen. And, some people have said, is Bitcoin being controlled by paper and blah, blah, blah. Hell yeah, it is. A market's a market. Wherever you throw money, it affects the market. That's the whole reason why we play the game, is that you have a meaningful impact no matter how small you are. You're on the list. You're on the board. And so I look at these things like I think we'll probably go to 132. That would be my prediction. And I think we'll probably then retrace back down to 118, 119 to sweep that 122, 123 level. And then I think we'll go back up and go up another 10,000. I think they're just going to, until proven otherwise, that's the pattern that I have been seeing for literally months now, is like these $10,000 bursts, retracement, sweep the low, make everybody scared, then another $10,000 burst. And we bursted up to 123. We've turned the old resistance into support. We've rebounded off of it, just to your point, with big volume. Wouldn't surprise me if we go up, have one fake out above 123, have a meaningful pullback to 116 and get everybody scared again, and then boom, blast off, you're up to 132. And 116 to 132 sounds like a big move, but it's tiny. It's like 7%. It's not even big for Bitcoin. Like that wouldn't be unlikely for the next bull flag poll that we see in the price action, right? That's the way I look at it.
I like what you said earlier about the chart being, the markets being a mirror of human emotion. I actually posted, and I'm going to assume you read my post yesterday, and that's why you said that today. But my post was, the chart is a mirror. If you don't like what you see, then fix yourself, because you can't change the market. Right?
I didn't see that, but it just proves that we're in sync with one another.
Exactly. And, and that's what it's all about. I think the more that people really get in, I mean, we talk about all these things, but at the end of the day, all these things are based on human emotion. How are humans feeling? And what is this group of humans feeling about this thing, right? And this is something Fibbo and I talk about a lot, which is this socioeconomic theory, right? This idea that, your large group, makes decisions based on emotion. We like to lie to ourselves. We like to be like, yeah, I bought that thing, whatever it is, that car, whatever, because it was a great deal. No, we buy on emotion, and then we try to use logic
to rationalize it.
Exactly. And it's everything that we buy in life, basically. We always buy and sell based on emotion. Markets are no different. but markets are going to have a larger impact because most of the things we buy are going to be things that lose value, right?
But
Whereas
I remember as a young trader this hopeless feeling of always top buying.
Yeah.
Like it felt like every time I entered a position, the market actually like had a vendetta against me because the price would fall out from that point. And
hit the like button if you guys are feeling that, or if you've ever felt that as well.
Well,
Because
if you have, let me give you my piece of advice, because I think this is the way that I reversed that logic. So, you do that enough and you start going, why am I top buying every time? And most of the time when I was honest with myself, it was because I was chasing price action. It's because I had eventually heard how much money a group of people were making in something. It made me greedy to participate in that money grab. And I'm their exit liquidity because by the time it reached me, the deal was over. You make your money when you buy, not when you sell. And so you start to, this is what I now think. When I have those feelings, because I still have them, I have them all the time. Like every day I hear about some project and it's like pumping like heck. And there's a part of you that's just like, well, why didn't I see that? Right.
Yeah,
Well,
emotions never go away.
That's right. Well, the bigger the market that you're analyzing, the more I think important it is to go, okay, I've been wrong 5 times in picking when to enter. Who are the people that are not sad right now? Because I'm in the majority that we're all crying. So we obviously were the exit liquidity. Who are the people that are out there spending money because they made the money on the trade? And start to find out why they got in when they got in, right? Because they obviously saw something from a potential perspective, and they were lone wolves in that effort. Like they went in and they were able to accumulate at the bottom. And so, always look at the other side of the trade to try to find out what they did to make them the winner and you the loser, because they did. Like they picked a different point on that chart to get in. Otherwise, they'd be in a losing position just like you.
Yeah. But see, you bring up the greatest issue that we have as human beings. And, everybody likes to frame things as it's the market, right? This is your emotion with the market. But really, how your emotions work in the market is the same way they work in every other area of your life, right? And so the thing is, as human beings, it's very difficult for us to be critical, to be truly critical of the decisions we make and accept that we make bad decisions. And then that way we can learn from them. We find that very, very difficult to do. We tend to downplay the bad or the not so great decisions we make. And we tend to play up all the luck that we have, right? And so we feel like we're better than what we are. And that causes so much loss in the markets. And we have to get through that in order to do exactly what you said, which is where you go and you go, okay, well, obviously you got to be realistic. Listen, I've bought the top the last 5 times now. Obviously, the issue is me. I'm doing something wrong. So if, what I need to do is go, okay, well, who didn't buy that? Who bought lower and sold up there where I was buying? And why did they do that? Where did they do? What did they get? What kind of they get? You have to do that, because as long as you sit there and continue to lie to yourself, just like in any other area of life, you're never going to get beyond where you're going to make the same mistakes over and over again. And I don't care if it's your relationship. My God, people, listen, if you are 20 years in and you have 15 different ex-partners and you're like, oh, this person's bad because of that, this person's bad, and you're finding out, oh, they're all bad and they're all bad for about the same reason. What is the one thing that's the same with everybody, with all y'all? It's you. You are that one thing that's constant throughout it.
Well, but here's where the solution lies. That most, I think, in all of us, it's hard for us to connect the dots when it's our problem, which is like not recognizing how you stop the problem from happening.
Yeah.
Let me give you a good example of a measure that I've put in place in my own life to keep me, because I'm not going to stop lying to myself.
Yeah.
I'm going to keep lying to myself. That's a part of being a human. Everybody lies to themselves every day about lots and lots of stuff that you're not conscious about. And one of the things that will trick you into lying to yourself without you really recognizing it is greed.
Oh,
And
yeah.
so one of the things that I've tried to do is, like, when I hear about a project and somebody says, you know what, you should really think about this. This looks like a great setup and a good buy. If that project, if that buy has already broken out and I'm late to the party, not interested.
Yep.
Because that makes me greedy.
Yep.
And I feel the greed when I see that green candle crossing above a threshold line, and I'm going, boy, this looks juicy, right? That's a natural emotional response. I'm not ever going to change that in myself. So what do? Well, I say to myself, you know what? Before I can make real trades, I've got to paper trade this symbol for 2 weeks. So I'm going to feel for it. So I know where the volume steps in, where the volume steps out, what the cycles look like, what the daily activity feels like. Are there giant wicking candles? Is there a constant selling pressure that's, very small but steady, that bleeds any momentum out? Like, all these things you feel as you get involved. If you say to yourself in that moment, because this is the pot calling the kettle black, I'm not going to paper trade. This is too. Well, you're greedy. You're in the greed zone right then and there. You can just spot it from a mile away and go, you know what? If this was a real trade, if this was something that was a prudent trade, if this was something that had a real setup that I should be monitoring, there's a time of due diligence and comfort that you need to put into that trade, so that you're not just acting on the smash buy. Oh God, the green candle's broken the trend line. Like, that's not a way to. That's the reactionary way, because in most cases, that's the head fake, and you just get slammed. And we talked about this a few weeks ago. Is like, that's why you buy on the retest and not on the breakout. And so just keep yourself, like to Chris said, keep yourself accountable to these triggers. And the way you keep yourself from acting on them is not lying to yourself again, saying, I'm going to stop lying to myself. It's putting practical discipline measures in place that keep you accountable to things. And when you want to break those measures, you're in the bad zone,
Yes. Man, I'm so glad you said it, because it's not just me saying it here, right? It's somebody else who does markets differently telling you the same thing, which is the fact that your emotions will never go away. I've been doing this 31 years. My emotions are still there. Tillman's been in markets for quite a while himself. His emotions, he just told you, are still there. We're human beings. And what makes us human is having emotions. What makes us successful as traders is learning that we have emotions, acknowledging they're never going to go away. So then we put together a plan. We figure out what triggers them, and we put together a plan on how to deal with that, so we don't have to emotionally react. Like,
and I know some people that aren't disciplined.
That you're not going to, that you're going to, not be emotional. You're going to be emotional. Figure out how you're going to deal with it before you are.
And if you're going to deal with it in the way that we're talking about, which is our method, which is very analytically dissecting how our feelings are impacting our decisions, and then breaking, the automatic trigger point of that. Some people aren't willing to do that type of self-evaluation and self-analyzation. And what I would tell you is act opposite of your emotions. Then I have a lot of friends of mine that they literally do the opposite of what they feel, and it plays out very well for them, because they know they're in the middle of the herd. They're truthful about, they don't have any advanced access to information that nobody else does. There's no advantage that they possess. So by definition, if they've had if an emotional response has been elicited to them from them, it's by definition happened to a lot of other people.
Yeah.
Like, so if you know that, and you can go, oh, the herd's moving this way, smart money must be moving the opposite way, because smart money is big money, and big money has to have the herd for liquidity. That's just the way the markets work, right?
That's right. That's right. They're gonna take your asset from you, and when they take enough of it so that you're not going to be able to put it in there and stop the move up, then the move goes up. I mean, this is basic Wyckoff understanding of accumulation and distribution, reaccumulation and redistribution. And I would tell you guys, listen, I know a lot of people. I know the hip hop in thing is SMC, or what people mistakenly call ICT. ICT is the guy. But before I go any further, first of all, I'm going to tell you right now, he did not create some algorithm that's running the whole market. Okay, guys, just stop the nonsense. Now, he does discuss a few things that can help you as a trader, but I would say, if you want to really learn much better than that, learn Wyckoff. Learn the Wyckoff method, because that's a very big understanding of everything we've been talking about: emotions, big traders, small traders, professionals, retail, and how they act and react. Because at the end of the day, that's how markets move. It's based on emotion, the responses to that emotion. Oh, but Chris, 80% of the stock market is done by algorithms. Yeah, algorithms that are coded based on what they know happens on the reactions with and
yeah, imagine a million pipes of water that some of them are turned on and some of them are turned off. And there's a computer that opens the valves across the million pipes based upon a infinite number of variables that are attached to it. You predict what the outflow of gallons per minute are across the million pipes. There's no way to, like, that is what you're dealing with. So you're dealing with the flow of money. And all you really want to pay attention to is how many gallons are being moved. And when a lot of gallons are being moved, that means somebody's figured out how to open up all the valves. And that's what we're in with Bitcoin. It's price discovery. It's like, well, what's going to happen now? How much water can be moved? Well, we're going to find out.
Yeah, we're in the process of finding out as it is, right?
Yeah.
Hey, man, I appreciate you. And of course, Andrew, who, shoved us on us, early, whatever. Anyway, as always, guys, appreciate y'all coming in here and hosting this with me and kind of sharing our thoughts and our, experience over the last 20, 30 plus years across, crypto and mining and TradFi markets and currencies and everything else, trying to help our listeners, understand a bit more than what your large accounts all regurgitate over each other out there, and it ends up being kind of confusing and usually not a lot of really useful information. So,
well, how do those large accounts get paid?
That's a good question.
I mean, well, we've seen it in the meme coin phase. Like, how many celebrities actually knew what they were launching when they launched their meme coins?
Exactly.
So my point is like, when you're hearing, like, you guys know about the Jim Cramer effect, right? I mean, his model's different. Yeah, he was a great hedge fund trader. He wasn't sharing all of his information as a hedge fund trader.
Yeah.
That stuff, it was under lock and key. Like, what's his proprietary edge. Anybody who's sharing openly their edge is killing their edge, and anyone who is seeing that is a market maker is going to harvest that money. That is a liquidity event for them.
Right, exactly, because they're going to know what retail is going to do with that information most likely. And I think the thing that people, I know we got to go here, but I think the thing that people really they really underestimate is just how much money the big players have. And they can just wade on through there, and something may slow them down a little bit, even pull them back a little bit at first, but just the dearth of money that they want to do.
You can see the depth of that pool. We've gotten a very recent measurement of the depth of that pool. You know what it was?
What was it?
The GameStop.
Oh yeah. Well,
go find, if you want to find out how deep those pockets are, go see how much cash they were losing every day in those trades, and they were able to make out alive. Like, no one else could do that. No one else has that deep of a pool to draw from.
Yeah.
So, when you're talking about retail literally mounting an offensive charge against them, and they still win the battle with unbelievable press and headlines. Like, that whole GameStop move was like unprecedented. It never happened in the history of man. And so, they were able to actually make it out. That should tell you how deep the pool is, like, that you can't compete.
Yeah. And I just think even, you give them numbers and people still can't fathom that. They can't logically make it make sense, but that's the reality of the market you're in, guys. And so you may think you have an edge, but your real edge, the real edge that matters, is discipline. It's the ability to create a plan and stick with your plan. That is your absolute greatest edge. I don't care what anybody tells you, like, oh, it's knowing this, or oh, it's having inside information here. No, your greatest edge is your ability to become and remain disciplined consistently as you're trading over time.
Well, it tells me, and I think you're exactly right, but if you extract the wisdom behind that, it just tells you that we're all betting on a lot of broken clocks. And the key is not to get bored in the waiting, because they're right twice a day.
Yeah.
So just keep them around and wait until they're right, because they're just a lot of broken clocks. Nobody can predict when the time that the clock is going to pay you on. If they could, then they would just be buying all working clocks. We all have broken clocks. So the patience that's required to just wait until they're eventually right is really where and just buy as many of them as you can. Just cycle the right ones out when they're right, because they're going to be wrong real soon.
And that's why you should remember, the only thing you control is what, Tillman? How much you lose, right?
That was well played. Touche.
Anyway, hey man, listen, we're glad you all joined us again for another Wednesday show. We'll be back again next Wednesday, and hopefully Bitcoin will have made some meaningful movement up, and everybody will now be saying that the top isn't in finally, because I'm getting tired of hearing that nonsense. So as always, that's it. That's what we are. That's what we do, and we love talking with you guys. So please come on back. Hit the thumbs up, hit the like, hit the subscribe, follow these guys here, follow me, and check out our companies at archpublic.com, and then members.texaswestcapital.com. We'd love to all talk to you and welcome you in, and give you different ways that you can get out there and have a lot better opportunity to win in the markets much more consistently. All right. Hey, Tillman, I appreciate you, buddy, and I'll see you next week.
See you, Chris.
All right. Take care, everybody.
Trading tip: always manage risk before chasing gains.